Hey guys, welcome to our first video on YouTube on day trading for beginner. Trading sounds like a great profession, right? It doesn't ask for any educational background. You can make some quick money by just being online for a few hours a day. And it doesn't need any human interaction. So the pandemic can go to hell. Because you can't lose your job, but that's not the whole story. So guys, it doesn't matter if you want to be a full-time trader or a part-time trader and don't know anything about trading. Today, by the end of this video, you will know exactly where to start because in today's video, we are going to learn 6 simple steps you can take as a beginner to become a day trader so that, like most traders, you don't lose all your money in the stock market on the first day. And as always, if you like the effort we put in making our videos, then make sure you hit the like button and subscribe to our channel for regular update on stock market. So guys, let's start. How to become a day trader. First, let's start by understanding what is trading. In the stock market, there are two major types of participants: investors and traders. Investors are kind of long term investors or short term investors. They do identify good companies and hold their stocks for years, hoping that their value will increase over a time, right? But day traders, they buy and sell securities and stocks and square off the trade same day with the goal of making a profit. You might have heard that satisfactorily more than 95% of traders lose their money because trading is risky. So if you are a beginner, here are the 6 things you can do so that you don't commit the same mistakes as those 95%. Step 1 guys, learn how to use trading platform. The first step to trade is to open a trading account and learn how to use the platform. I personally use Zerodha Upstocks. Avoid traders bad habit. Second step guys, this step is so important. Avoid traders bad habit. Okay, even before you enter the market, remember to avoid these common trader bad habits that make them lose too much too soon. Some of these mistakes are trading based on tips and alerts from random chat rooms instead of doing their own research, right? You must do your own research. Don't go for always tips and alerts from random chat rooms, guys. Your money on risk, right? Okay, second point, not following a trading plan and instead of making a random trades when the market open that are driven by emotions like fear, greed or worse. And third point, failing to plan for failure by not doing any risk management. Guys, remember, in every trading there is some risk management, right? Your risk management should be very crucial and very hard. You should stick on that so that your loss may not slump your whole money, right guys? Okay, and the fourth point, trading with your living expenses instead of disposable income, right? Guys, if you don't have any disposable income and you are just investing your whole money in gambling, please guys, stop. Remember one thing, you always use disposable income for trading, right? Now step 3 for fundamental analysis, guys. This step is so important. Remember the fundamental analysis of any company. If you are buying any stocks or selling any stocks, this is the one of the most important thing you should remember, right? So as a beginner, pick a large cap company, especially for the sector you are familiar with. Let's suppose you are from IT, right? You are working in IT company maybe. Then you may pick TCS or Infosys and add them to your watch list. You are familiar with it? On one hand, perform fundamental analysis of this company, like read their balance sheets, read about their management, and on the other hand, absorb how current news is fluctuating in market value, right? The news which is trending on any company is so important. It does matter, guys. Remember, if a good news of a company comes, the stocks may go up, right? Because people do start buying from there, and a lot of people when do start going buying from there, the stock price goes up, right? Okay, people might say that the fundamental analysis is not important for trading, but this will help you understand the personality of these stocks better, which in turns will help you make better trading decisions, right? In fact, I want you to comment below and commit to making a start by telling me which company you are going to start with first. For example, I'm going to start analyzing TCS, Infosys, Reliance, right? Because these are large cap company. I can trust on that company because they are large capitals company, right? Step 4, guys. Learn risk management. Risk management is the most important part of any trading activities, guys. Okay, so you must have heard a lot of people refreshing or trading as gambling, right? Trading is not a gambling, guys, it's a knowledge. When people do have knowledge, they do a good trade. When people comes without knowledge, they do a gambling, right? There is a difference, but the difference between a trader and gambler is risk management. To give an example, some traders might put all of their trading capital, say 30,000 rupees, on one stock, let the company be XYZ, hoping that it will go up by 5 points, but they don't prepare for what will happen if it goes down, right? But risk management allows you to protect yourself when things don't go according to your plan, right? Just have some risk management, guys, and don't leverage, right? The more you leverage, the easier and the more likely the odds of you losing money are. So try to stay away from leverage, right? Don't use your leverage money. If your capital is 1 lakh, try to use only capital of 10,000 or 30,000, right? Don't leverage your money, guys. It will slump your whole money, guys. Okay, so now talk about stop loss. Like, if you want to take a trade, first thing you should know, where is my stop loss, and stick to that, guys. Okay, having a stop loss is a good rule. For example, if you're buying something of at around 100 rupees, you might be right 5 times, right? Wrong 5 times. When you are wrong, you need a stop loss. So if the 100 becomes 90, you can't exit it, guys. Don't slump your whole money. Even if your money is total 100 rupees, you should exit it at loss of 95 rupees only, right? You are not going to take a loss more than 5 points, right? That's enough. You should make a stop loss very strict and don't slap your whole money in one day, guys, right? Now the thing comes, the third point is diversify. Never put all your eggs in one basket, guys. If you have 100 rupees to allocate, buy 10 different things, right? Just stick to large cap diversity as much as possible to learn some basics terms and concepts like risk per trade, risk to reward ratio, position sizing, risk capital. I will explain this whole thing in my next video. Okay, guys, open a book and journal of all your trades. This will help you discover your trading style, guys. As a beginner, you need to understand that trading is not about the money you make, it's about the money you protect, right, guys? And the more money you protect, the longer you can stay in the market. So step 5, read some books. See our video. Our next video will improve your knowledge. There are high chances that you are here because some movies or TV series has gotten you interested in the stock market. But if all that trading jargons has gotten you confused, then here are some books that can help. Market Wizards, Reminiscence of a Stocks Operator, The Intelligent Investor, The Candlestick Course. I have left the Amazon links of all these books in the description. These books will help you understand some basics, a little bit about fundamental analysis, a little bit about technical analysis, which in turn you can use to build your own trading strategy, guys. Step 6, the most important thing is follow the news. What is interesting in that is all type of news, local, national news, international, and news like vaccine productions, company mergers, acquisitions, rupees versus dollar rate, union budgets, elections, even rain predictions. So, as a beginner, your job is to first follow news regularly and observe how it is impacting the stock market prices, which companies are getting most affected, and how, what kind of news resources to follow. Okay, from where you can gather some news, right? For some good news, you must go and check screener.in, tickers, phenology.in, Google News, right? From there you get some good news, good content, so that you can take a proper trade.